Okay, hi there, traders. G'day, Pete. Hope you're well, mate. Um, Happy Easter to everyone as well. How was your Easter anyway, Pete? Relaxing? Any sailing? Or am I just trying to get all my charts? Get rid of that, get rid of that, and we'll just do that. Nice, mate, nice. A bit chilly out in the water, I'm guessing. Yeah, no, true. He's here too. It just turned. I was one day shorts and a t-shirt, and a couple of days later, you sort of got a nice jacket and the moccasins back on. The work shoes, sorry, and the nice work pants out of the top of the cupboard. There's the tracky jacks. Um, a bit of a heads up also. So coming up, I know a few of you might be involved in the ATAA. I know you are, Pete. I'll be doing a talk. Now, I'm not sure if it'll be a webinar anyway on, what will that be? I think it's somewhere early May, so 12th, 13th, 14th of May. I can get the details, just email me off if anyone wants the details. I'm pretty sure if you're a member, you can join in, no problem at all. But it will be a webinar. It'll be about stuff we talk about anyway, but it'll be a good recap. And you can also jump on and ask questions while we're talking. So if there's anything that's been you have been questioning, yeah, just jump on and yeah, ask questions, no problem at all. So anyone that's new, welcome to TradeSetup. Hope we had a good Easter. Hope we had a good Easter. And you had a bit of time to relax. I had personally had the kids home, so and the wife home. She's a teacher, so all home. So you've got to make sure you got that door closed. Otherwise, they're running and asking questions. But it is a slightly easier time, I guess. You can get other work done rather than just stare in front of the markets all day. So it's been a good little break. Back on board today, which means no kids. They're back at school, so I hope we all had the same bit of time to unwind, reset. All the markets themselves have just been, chugging away nicely, heading higher. There's some. It's getting a bit choppy. I mean, I don't know if you'll notice. You watch the SPY on the open today. You expect it up. It opens up and just gets sold off to flush everyone out, and then ramps back up again. The same with the Nikkei. Any of these indices, they're getting smashed on the open, and then everyone's sort of, oh, this is the sell-off, getting short, and then bang, ramping straight back up again. And it's just chopped to get people back on the sidelines. Because you can't just expect to keep going up in a straight line, especially when things get extended. If your algos and things are starting to play the market, your bigger traders are trying to get set in different things. You can't just jump in at higher and higher prices expecting not to come under pressure. And that's in anything. That's in your indices, your shares, any position you want to get in when it's extended, and you do think the trend's extended up, for example, and you think the trend is still up, which is great. You want to be buying those flushes or the pullbacks. You want to buy, just jump in willy nilly because you could be behind the eight ball right off the bat. And God forbid if that's the time when the market does have a decent correction, then you straight off the bat you sort of got to know your risk levels, and you could get caught. So I think a lot of the markets are sweeping people out on pullbacks. We'll show you the Hang Seng in a minute. Hang Seng, same thing, smacked on the open. And then it's just been sort of one straight move straight up with, if you're not watching the 1 minute chart, looking at the 5, for instance, it's just one big bang, bang, bang green candle. So you had about 4 reds and then a green, which sort of took out the previous high, and then bang, it was just straight up from there. So hard stuff to trade, but they are just flushing levels even, and then banging straight back up. So anyone that looks, that's the breakout traders that are looking to sell on that break, or they're long, got their stops below, it's taken the stops out and then turning and rallying straight back up. So anyone that did get long and get stopped out will probably be, it's that, not the fear of missing out if you are wrong, I guess. So you are right, but you got stopped out, you're going to jump back in and try again, generally, or you get the people that just chase the tide, chase the market up. So there's a number of reasons why it happens, but they got to, like I said, when the market's stretched, it needs to put fuel back on the sidelines to come back into the market. If everyone's loaded up that wants to be loaded up, then you can forget about that continuation. It means for continuation, you mean there's more and more money coming to the market without anyone being flushed out. And I think there is a finite amount of funds going in and out of the market and money flow. So that's that's the way I sort of read the markets and see the action. But at the moment, yeah, a little bit choppy. So for anyone that's new, sorry, I got sidetracked quite easily, which I do. Welcome to TradeSetup in the live stream. So what we do normally is talk for probably half an hour. I talk for half an hour, and then we open it up to anything that you want to take a look at. So normally have a bit of a topic. I can chat about different things. At the moment, I just want to talk about the big flush that we saw on your Bitcoins and your cryptocurrencies. And it's very interesting reading. You read, and it could be, people could get absolutely smashed. I think they're lined up to get smashed because they're not trading it. They're just, a lot of people are convinced there's no way up, there's nowhere else to go but up on a lot of these cryptocurrencies, and they think it's the future, this, that, and the other. I mean, yeah, it could be, they could be right, but it's not going to be when the big boys start playing. You can expect them to get squeezed out constantly and chopped around unless you're committed to hold. It could be a real bumpy ride if you don't know what's going on. And I think that's what happened on the weekend. There's a big flush, and it just took a lot of people out. It would have just been a bit of a big stop hunt, which maybe got out of control. And anyone has probably been waiting to short the market is jumping in and short it, and then potentially they're getting squeezed out. So we'll have a bit of a look at those charts, and have a look at just your commodities. We've been talking about gold, so actually I'll just get this off. Having a bit of a chat about gold. I did send out an alert, and I've been fairly bearish on that for a while. We'll just get into gold now. We'll look at the currencies, and then we'll look at the I'll look at some of these commodities first, and then we'll get into the Bitcoins and stuff, and then we'll open it up. So like I was saying, the next half an hour, the second half an hour, or thereabouts, just open it up to anyone that wants to ask a question. It can be on anything. It doesn't have to be just a stock. It can be on the Aussie currencies. Even if I don't trade it, I'm pretty sure I can have a look at some technicals and get a bit of an idea, a feel for where it's going, and some levels to keep an eye on. So this is the Hang Seng actually. Look at that. So just what we were saying, look at that flush. So what I was looking for on the Hang Seng, this is the index, the physical index. Looking for a bit of a pullback because the trend has been up and it's broken this longer term downtrend. You can see it's been building, and all this chop in here, it was, one day just smashes up out of the blue off weakness, and then the next day, when it's consolidating those highs, it's got some strength, showing some strength, it sells off again. So it was just clearing at the market, both sides of the market, and you've got to be willing to accept that as part of the game. And that's what we always say, trade what you see, don't trade what you think. If you think it's going to be bullish, you could be going long into a bearish market and continually get chopped around. So you just don't want to do that. You want to trade what you see, look for the open, see what weaknesses or any strength coming into it. The Hang Seng can do that quite often on the open. Say they have a session now, it's 11:15 till 2, and then they open back up at 3. And I think the index itself will close at 6 p.m. now. Yeah, 6 p.m. now. And then they have the futures market keeps going until the US closes around about there. So what they'll do in the early sessions is maybe flush one direction, and it'll be a quick flush, and then it just goes all the way in one direction the other way. Or it's basically picking a direction, if that makes sense. So you can see this, this market here opened up, went straight up, spent most of the time going up. Next, I think this was the next session, somewhere around here, it just opened and went straight down. Here, most of the session was up until you sort of run into some levels, it gets a bit of a squeeze, but it can trend quite well, even if it looks like, that's why you don't really want to think overbought, oversold, because the market can go from, down to being overbought and just continually going like it was today. This is a 5-minute chart, by the way, so you can see that big flush on the open. The index was showing that the futures were down. Just take a look at the futures. So the market, you can see that big flush on the open and then bang, straight back up. So that's what I was saying about, green candles. There's a couple of red candles there and then boom, straight up. So just, you got to take note, if that's breaking a level, like a lot of people will be looking at, okay, that's the low of the day. And I had that as a level, but not to trade off. Sorry, to trade off, not to trade on the breakout, because my style is never trade with a stop entry below with where you're going to put your risk. It's always off a shoulder. So I'm banging about these shoulders a lot. And I think that's exactly why. So it doesn't have to be off the 5-minute time frame, but what you want to see, if that pressure's down and then you start holding some minor lower highs in a 1 minute, for instance, it could be any time frame, whatever you're looking at. But you're using those 2 time frames, you get yourself into a shoulder, which is that continuation of that weakness. If it doesn't play out, and you just got to stop entry here, which a lot of people do that. The market knows that will just go on a bit of a stop hunt and then turn around and retrace on them. So that what they've done gets stopped in short, and then they turn around and get stopped out again on the way up, because it's got no confirmation whatsoever that's going to continue with that big press down. Um, they do that on purpose, take out a few levels, and then ramp straight back up. And you can see it's just taking out the top side. So it's taking out stops above this level and just continued on higher. So it's just trapping traders. We've spoken about this before. It does it time and time again. It's something to take note of when you're trading, especially times like we are at the moment. We're getting a bit stretched, and it happened also on the Nikkei. I'm not sure. I was going to show that probably in the futures. Yeah, look at this big flush lower from the open, big flush lower, and we basically made back those losses, which is a big move. It's a good move off the low. And you just got to be wary that you've got your levels marked up and watch those levels. Okay, so you're watching what happens off these levels. For instance, you've got this zone through here, and you can see flush it, retest and hold. So that's where you want to be looking at longs. You would not want to be looking at shorts there because you've flushed it. I always look at these things as a flush. If it's weak, it should always. As a rule for me, I don't want to see it come back above the level because I always think that's a flush, retest, and it's going to go back up again. But if it holds below a level, so pressure's below the level, and it starts to grind up, and you get more of this action off the low, it starts to grind back up again, then I'm looking for that lower high. Well, I'm looking for that lower high. You get what I mean there, to sell into. But that's different action when it just spikes straight back up above the zone. Okay, so that's what you'd be looking for shorts and trading off the shoulder. If it doesn't play out that way, and you get this kind of thing when it retests, you know that shorts going to come in here. You got shorts built up here, stops in here, feeling a bit confident when it starts to roll back over again. They might be under pressure, and then it turns around and squeezes them out for a second leg up. And I'm always really looking for those. That's one leg, two legs. And the same on the downside. If you get that one leg down, you get another shoulder, and you get a secondary leg down. That expansionary phase. All right, so that's what you're up against at the moment. What we're all up against at the moment with these stretched markets. Like I said, the Nikkei itself. I'll have to scroll right back. The Nikkei itself is a bit more of a mess than anything else, but you look at the hang stands being quite good. Our market, you see our market, look at the SPY 200, flush the open, down. Anyone who's been long from overnight, Friday night, holding essentially overnight, holding positions overnight, they want to squeeze those people. They want to put more people back on the sidelines for another trend to resume that trend up or to continue on up. So let's get on to, like I was saying, we'll just go over to the currencies. We'll look at gold. So gold, I don't know if I'm going to get onto the 30-minute chart. I might just delete. I've got all this sort of rubbish on here from when we So this is the two scenarios. This is what I think I emailed out. Alerted to our client base. Just these sort of two scenarios. You want to see it pop up above there, and you want to see some sort of consolidation above a level. Okay, and it's exactly what we're saying. When the market can pressure through a level, you know that it's either going to trap and reverse, or it's going to actually continue. It's going to retest and continue. So there's a sort of two scenarios you've got to have in your head when you're marking up your key levels, because you know that market's pressure down here. It's trade off that level, coming back in that level, found some weakness again, back in the level, found some weakness. So you know that it's a key level where there's going to be some stops above that. Okay, so if you just remember that with your trading, it's going to be some stops. They're going to target it, but it's what happens after that. And I would never trade the breakout. I mean, you could have probably traded the breakout here, but your stop's going to be right down. What's that? 17.20, your breakouts at 62. That's a 40-something buck stop on gold. It's just not worth it. You want to trade you want to have much less risk in that. If you've got 42 bucks and you're going 2 for 1, you're going about $100 gain. And you're asking a lot from the market if that's the case. So let's just get rid of that. I'll just draw this up again and why we're... Okay, so this is sort of the scenario. You've got the longer term move down. Okay, then you had this move down, which we've been watching for a while. And as soon as we got that sort of break in that area, and then you held up and retest that low and hold, you know that we might get a bit of, we call it back and fill. So this is your leg down, that's continuation down. Any off, you've got, we call it RTF there, you've got your shoulders in here, all pressuring that market down. We were short bias down there. I didn't actually trade it short, but to actually stay out of your local gold shares until we get some sort of base building. And you can see this wasn't just a level there, it was actually a level from previously too. Okay, so you can see it's touched up, it reversed off, went through, faded off that level, then started retest, went through, retest, hold, and rallied. And we've come back in a couple of times now and held it. So there's nothing to say we can't roll over and smash back down through that level now, because the longer term trend is down. But I think you've got to link that into what's happening with the US dollar. US dollar is fading at the moment. There was that talk of higher interest rates, higher inflation in the US supporting that US dollar. That's no longer on the cards, and everyone's starting to believe what the Fed's saying. There ain't going to be inflation anytime soon. They're not going to take their foot off the gas if there is that spike in inflation. They're not going to worry about raising rates anytime soon. So they're happy to hold interest rates where they are, continually support bond market, their QE, not QE, but their bond buying program, leave that in place to keep interest rates low. And we did think that once bonds were selling off, there was that talk with yields going up, that they're going to be forced into it. And I was thinking that myself. I thought, let's just be prepared if something does happen. It didn't eventuate, and now everyone's reversing those. Anyone that was long dollar, short yield, long yield, short bonds, as reversing those positions, and then we're getting some US dollar selling coming in, and I don't think that's going to change anytime soon. It could just continue to creep down. The dollar index, which you'll see here, and that's been we're on the daily. Don't forget, this is kind of the leg we're looking at here. Got an uptrend that's broken. We've got some pressure coming in, so we're just really trying to analyze from here. Where's it going to? Do we find 91? That zone is going to be a bit of a bounce. We might get a bounce up, lower high, and pressure back down into these lows. But I think bias is down at the moment. That was a decent correction. You've got a good zone through here. So we had the trend down, broken that trend down. So now this is kind of that reversal. You got one move up, two moves up, that reversal up. Are we starting to fade again back into that zone, or are we going to go down through 90 cents or 90 on the index, which I'm not biased that's going to happen, but I'm just biased down the dollar, which means, like I said, biased up on gold for now, and then just see if we can get any plays into gold stocks. Now, your local gold stocks at the moment, they're not looking to crash hot. I mean, I know they're up, but they've done that before. You get a rally in gold at $20 when it's moving down. On this leg down, it would jump up a couple of days. People would be buying gold and they get squeezed back out. It's happening time and time again. So I think people are a bit battle wary on gold to just dive in again. So we just have to keep an eye. I want to see some nice setups, but I think the key for me is if this just keeps grinding up and we go back up to this zone, I think we're going to have a lower high come to play. And then what you'd be looking for, it could take a long time to play out. Are we just going to chop up from here and do this kind of thing and go back up to here before we start to really unwind? If that's the case, then you would expect the dollar to start rallying off, whatever level. But for me, I wouldn't mind seeing a bit of a base build. I wouldn't mind seeing a retest of these lows in gold, only because if it can sort of retest it from here, it means that it could be more bullish, and that could take us up and through, to break out through, say, these highs, which we might find a bit of pressure up to, was it 1868. So if that's the case, and that could take us up to the highs, that's when the US dollar can really be in a bit of a meltdown mode, and you can jump on board for a bit of a rally into gold. But for now, on the daily chart, if you look at the daily chart, we've got that's your leg down, retest this inside level, that held, failed off that level, so you got your secondary move down. We started to hold, we're lifting off that level, but that could be just a contraction of that leg down before we resume another big leg down and we start to head down to 1451, because the overall trend on your daily, we're still in contraction, so we're not trending up on the daily basis like we were back in what was that, June? Was it last year? Yeah, last year. It really started to kick higher. Okay, so I'm not bearish on gold anymore. I'm more bullish in the shorter term, but it's just really seeing what happens, in the coming days, and especially with the US dollar as well. So if we go over to any questions on that, guys, I just confuse the issue or not. I think if you go down to, you look at an hourly chart. Hourly chart definitely is heading higher, and that's where you think we could press up from here through 18. These levels are holding. We're holding off this sort of support zone. We broke out through here, broke out through here, held, broke up. We're holding inside level. Don't be surprised if we get a flush. Markets love to flush you out. Setup, it looks great. It flushes out Asian traders, which might jump in the Asian session. And that's not, I don't just mean Asian traders, but anyone in the Asian session is going long. They go long on this sort of setup, stops below, the market can turn, flush it out, European Open, and then turn around and ramp back up. So you're right in the direction, but you're wrong in the execution. So it's just be wary of that. So that's your shorter term time frame. I think definitely short term's heading higher. This is kind of your leg up before we had a decent correction. Where does that take us? That takes us towards that, above 18. So we could be, I'd expect that we're going to head towards 18. Is there any other confluence? And that takes us sort of into this zone as well. Okay, when we're looking at even on the half an hour chart. So that's sort of your retest fail here, pressures up, breaks the high. So that there you don't know whether we're going to go. And this is where we're saying just be careful about buying that breakout, because we could be ranging from here. We could range between these two levels. As it played out, we didn't, and we held an inside level, which is great. And we held this zone in here at 1724, and we've lifted off there, which now it's a bit more obvious that that was a high low. And if you extend that like we just did, it takes us back into this level somewhere around 1800. So there could be, push through 18, it could be fall short. We don't know just yet. But I think it's well and truly on its way up there. So just like I said, be wary of that if you've got some gold positions that you're looking at, because we could roll off and we could be, bigger range trade between these two zones. So you just have to play it as you get a read on the action. Now, what I'm going over crude. Crude is, to me, we've broken out this consolidation. That's your longer term uptrend. We've had a pullback. We've cleaned out some of these late buys, anywhere sort of above 57, 58. We spent a lot of time chopping around here, quite volatile between as the bulls and bears were fighting it out. But you can see once we started to see this level hold as a higher low, and we got volatility, you can see it's quite clearly that the swings are a lot narrower. The volatility is contracting and we start to expand up again. So this is an expansionary phase. If we can hold this zone in here around 62.50, I think that's going to take us back up to 66. If we start to get weighty here, we might have a decent enough, we might have just sort of that another correction back below here. We might be testing into, this zone, back to around 60, and then reset and go again for another decent leg up. But for now, we're really just watching what this corrective phase. I think it's just corrective off that highs from Friday. Corrective, but is it going to hold 62.60 or 62.50, or are we going to go for a deeper pullback to 60 or 60.50, for example? If we start lifting here and you just get this intraday, you get a bit of a higher low in here, then I think crude's just going to continue on up to 66 or so before, without really a pullback, and then we'll have to watch out to see what happens. So oil, sorry, that was oil. We got copper. I'm just sticking to the hourly charts for now. You can see longer term, we've had this leg up. We've had a massive consolidation through here, because what you've got as the world comes out. Oh, John, saw that, mate. Sorry. We've got this consolidation through here. You've got retest failures we've got in here, and we start to lift. So that was your contraction phase there. We started to lift. We've had a pullback and we're lifting again. Whether or not we can continue on, like the market is still, if you look at it on a daily basis onto copper, it is, it's extended, but there's no reason why we can't just fluff around here and then extend on those gains. Because as the global economy wakes up, but comes out of that the pandemic, reopens like fully, you're going to get demand is going to increase and supply, You're going to get, so it's still a demand-driven scenario at the moment, which I would expect to support prices on copper. It's just, if you're trading copper itself, where are you going to get in? If you're trading the stocks, you just want to, stocks are probably going to be bullish until that copper turns. At the moment, it's not really turning. So on a daily basis, you've got, we're holding in here. That's where it was, just around the 4 mark. Say we've had that high low, so I'm expecting this just to continue to grind up, because we've got an extension up. This is your contractive phase or your corrective phase, your pullback, whatever you want to call it, And now I think we're coming out the other end and we're back into an expansionary phase, meaning prices are heading up or you're going with the trend. And we could be looking at something like this. So if that's the case, on copper, we'll clone that. I'm looking at something, we could be pushing it back up to these highs. What are those highs from? They're highs from 2011. Okay, whether we push straight through it. So it's really just whether you take it from this low. Look, it still looks like we're going to extend through. So you just got to be wary that that's going to provide some sort of selling up there, maybe. Okay, so we'll just bear that in mind. We'll just keep an eye on that. So that's kind of just the commodities I want to look at. Let's just go over to Bitcoin. I think they're interesting. I'll delete all this off. So on a daily basis, it doesn't look too bad. It's just, how to say it? So you've got the market. We all know, everyone knows Bitcoin's been running hard. We're up to 64,000 and we just got smacked down. It basically went from 64 down to about 54. So $10,000 on Bitcoin. And people say if you go look at the daily charts, you'll get all over Twitter, but they're the bag holders. They're people that are not going to ever sell. Are talking it up, saying it's just a percent correction. Yes, but it's a big percentage correction. That's a massive. In one or 2 days, that was a big hit. So if you're looking at, you're sort of taking, that's your first corrective phase. So we had this move up here, corrective phase. Where did we come from? So okay, so that was your first corrective phase. If you're taking some sort of support across here, and they're your lows you're looking at, then yeah, it's broken down, potentially broken down. And the thing is too, as from technical patterns, you're looking at all these kind of patterns. That was your wedge, whatever you want to call it, triangle. But we seem to be breaking down with that move over the weekend. Can we expect a decent correction? And this is where it's going to catch people off guard. We're going to see something like this, and then we're going to get this lower high come into play. So you can guarantee if we start to do that, everyone's going to be talking up. See, I told you buy the dip. Everyone's has been trained, has been brainwashed to buy that dip, buy the dip on your cryptos, buy the dip on Bitcoin. It's been working. That's fine. So even if I'm just trying to think, if you bought the dip in here, okay, eventually you're proven right. You bought the dip in here or in here earlier, you're under a bit of pressure, then it rallied to put you back in front. But sooner or later, there's going to come a time when I don't care what people say. They say it's the next big thing. It's this, it's that. That happens time and time. It's a rinse and repeat kind of a sentiment in the market. With everything, with your stocks, with your currencies, everyone thinks it's going here, there, and everywhere. There's a big talk up. When you're in a bull market and everything feeds on it, everyone feeds on each other because you're long and you want to, what you're looking at has been millionaires being made in Bitcoin, this, that, and the other. So my theory is that everything repeats the same type of price action. The bigger the trend up, the harder it can fall. And there will be people that won't want to take a licking on the price or their trade. So just depending on where they got in is how much heat they can take. I think it's a psychology in the market. If you said it's going to 100,000, you've been adamant in that, and then there'd be people all over Twitter saying the adamant's going to 100,000. You've got to hold on, just hold it because we've been proven it's buy the dip, buy the dip, buy the dip. Then one day there'll be no dip, or we might say this is the dip and it starts to go higher. So they say, I told you so, I told you so. And all of a sudden, you start to get lower highs come into play. And if that's the case, then this thing could really take off to the downside and really start to squeeze out because there's so many people, because it's been all over the media, it's going into your newspapers, it's on, people, when they're driving a taxi, they're talking about, you heard about that saying, if the taxi driver's talking about buying, you probably should be selling if you're holding, because everyone knows that it's going up. So what it's done is dragged in all the fuel it can. Anyone that wants to buy it has probably bought it. If there's going to be traders that jump in and out, but generally, if anyone wants to buy and hold, they've done that. So if that's the case, how many more people are on the sidelines willing to push it higher, continue that trend up? And what it needs to do is have a good flush. Whether this is just a flush and we start to, could be completely wrong. We start to grind back up, take out the highs. I don't know. But if you start seeing this price action and we start to roll, I would be expecting a decent move down. I think there could be there'd be a lot of people put under some pain. And that was all because of that, that kind of a sell-off there of a couple of sessions has been pretty harsh. This one was pretty harsh, but it really didn't break any key levels. It's come back in and tested in here. You know, we just sort of tested back into that breakout zone. That's fine. That's a technical pattern. We lifted back up, had a pullback. Again, didn't really break any patterns. But now what we're seeing is some support that's been broken, some key support. And that happens time and time again when you get that kind of thing. It breaks. Anyone that is quick to sell has done it. And then you've got the hodlers, or the holders that want to hold through anything. You know, thick and thin, they'll hold it. They're the ones, and then all of a sudden this is going to create, if we start to grind back up, it might drag in a few more buyers, but if it starts to fade, anyone that missed that sell and is technically savvy, I'd say, is watching this, and we start to get some lower highs coming into play, some key lower highs on a daily basis, they might not, especially if you're long from up here, they're not going to hold it for too much longer. If you're long and you want to book away some gains, even if you book away from some partials, that's the selling coming in. So that's what I'll be looking for on Bitcoin, and you can see a lot of, you know, it wasn't just constrained to Bitcoin, it was basically across the board. You know, Ethereum got smashed down. It did bounce back quite a bit. You look at Ripple, got smashed down. A lot of heat coming out. So it's, like I said, the harder it goes up, those sell-offs are going to be pretty savage. And if it doesn't repair and start to be constructive, if you don't see those higher lows and you see more of a grind up, I want to see, you know, for instance, on this one, I want to see a bit of a pop up. Then I want to see something where it goes back in, a good sell-off that gets stoked up again. I want to see something like this before I'm looking to get back in, as opposed to a bit of a grind up and then a lower high coming into play. You know, it's different price action. So I think that's going to be, you know, if you kind of do this, we have a pullback and we grind up, we pull back and we grind up, I think sooner or later there's going to be some lower highs coming in, and this sell-off is going to be a bit more severe. Okay, so yeah, interesting to see that over the weekend. It happened across the board on crypto. So the question is, a lot of people are into Bitcoin. Is that going to be, we all know that what happens if you've got people are loaded margin left, right, and center. Funds, everyone, there's been some funds that have started to get into crypto, get into Bitcoin, build some positions. Are they going to be caught if there's a sell-off with margin calls? You know, this happens time and time again. If they're going to be caught, what's going to happen there? Does that mean they have to ease out of some other positions, you know, into stock positions? If we started getting a decent sell-off into crypto, and you know, your Bitcoin especially, and say Bitcoin, Ethereum, I'll be looking at as the two main ones. If there's going to be a decent sell-off there, is that going to trigger like a bit of a margin, you know, sell-off into the markets overall? At the moment, I mean, they didn't really get hit. The S&P, look at that, on a daily basis, just continues to chug away, new highs. The Dow, new all-time highs. The Nasdaq, it's pushing the new all-time highs, I think, as well, thereabouts anyway. So this market is very strong, and like we're saying, there's nowhere to put your money at the moment. Now, I thought we were going to get a bit of a sell-off in the ASX recently, but it really sort of broke some levels. We're talking here, broke some levels. Let's just take that. It was about here, wasn't it? That's what I was looking at. This is a consolidation. I thought, okay, we're going to get a secondary leg lower. It just didn't happen. The market is just too strong. It just traps some shorts and turn around and squeeze them straight back out. So we'll see what happens from here. So is there anything, that's pretty much what I was just looking at talking about. Have we got any shares or anything else at all you want to have a bit of a look at and discuss? The bonds, let's look at bonds, because they could come back on the cards. It's something you really do have to keep an eye on, because if there's going to be a decent sell-off, that might drive some fear into the market and out of shares like it did previously. And you can just imagine if the bond market starts to sell off again quite hard, then VUL will do. Bond market starts to help sell off quite hard, then you can imagine the Nasdaq stocks or tech stocks are going to cop a bit of a hit, because that's traditionally what's happened in the past. That's going to drag the S&P down, and maybe the Dow's going to be capped as well. So we do want to keep an eye on that, just to see what, you know, latest price action sort of saying. At the moment, we're grinding our way back up. This is a level that, you know, it's not a key level at all, but it's just, you know, you can see that massive rollover, accelerate into that support zone. So we're obviously going to be working off that support. How high do we go? Or, you know, do we just sort of chop around here and then go down again for a secondary leg? But that's still something we're going to just keep an eye on. We'll see how that goes. Something I was just looking at is Japara Healthcare. So I've got this on the daily chart, but if you go and look at the weekly looks really, really good. Not really, really good, but I mean, it's sort of the first time it's popped up for a long time. Popped up above the EMAs, we've got the 20 and the 50, and it's holding. And you can see this big sell-off since 2016. It's just been heading south on the weekly. Okay, so I don't mind the stochastics either, the way it's sort of had that pop up here. It's had some selling pressure coming in, some more selling pressure, but on this, you can see that secondary bout of selling, it really didn't go anywhere on the downside. So to me, that's hinting that we're going to head higher, okay, on the weekly. So it's really a matter of dropping down to the daily and see what happens. I think it's extended on the daily. It's going to be a tough one. I would rather see a bit of a spurt higher, maybe like this, and a pullback to the MAs and hold, and then buy into that pullback. Because if it spurts higher here and you start chasing it, we could do this and then go sideways, and then you're caught in a rubbish position, potentially on borderline getting squeezed out. Okay, so that's one. There was another one that's got some good weekly action, but it's a bit extended on the daily. Just can't remember what it is. 40S is another one that I actually quite like. It's a bit thinly traded. It doesn't trade that much either. But it's something that you want to see. You really do want to see some volume come in. The actions start to heat up. At the moment, it's not. It's just sort of, it looks quite good on the weekly. Expansion up, that pullback held the MAs, a bit of a pop up. Some sellers started to come in, but it's getting soaked up again at 7.5 cents. So it could still contract from here, and it could. There's no reason why it can't break down and go straight down through 17. So you really want a bit more evidence that the market wants to go higher. I think on the weekly, it could still grind. The daily, yeah, it's that selling pressure has been held up at a higher level. You can see just in here. It's probably not showing too clearly, but let's just show you that. So you can see this selling pressure as we go from overbought to oversold in the stochastics, it's holding at a higher level, say around 18, as opposed to when it was around 16. So I think weight looks to be up to the upside. The bias looks to be to the upside. I can spit that out. I'm just waiting for a higher low to pressure. I just want to see that sit on the MAs and see if we can hold a higher low and potentially break up. We could get long through 20. But you want to see that volume come in as well. What was the other one I was just looking at? Newcrest, I got mine on that. It's just a holding. What was the other one? OMH looks good on the weekly. I wouldn't mind a bit of a pullback to 75. I think this on the daily, it's a bit stretched. I don't want to get in here. And I was a bit reluctant to get in on that breakout there because it really wasn't breaking a key level. It did play out. Look, it worked out okay in the end, but that's hindsight trading. At the moment, you wouldn't mind seeing a bit of a pullback on the weekly, holding a higher level, say 75 or so. Retest maybe 80, 78, 80 or thereabouts. And then if it starts to lift from there, then you could potentially jump in. I think it looks quite good. So the weekly is looking quite positive. OMH, Grange, not the weekly. MGX, Mount Gibson. Let's just go over to that. On a weekly, that looks really good as well. So that's your, and you can see that big run up here. It's had a good pullback. You can see that contraction. And then as it got through the lows here, it didn't get too far before it got soaked up again. Then we started holding these higher levels, popped up, hasn't broken that downtrend just yet. But I think the way we've had that sort of run up here from in November 2020 until, what was it, about mid to end of Jan this year. And then we've had that 2 legs down. So for me, that's kind of important. So if we start to hold, if we have a bit of a minor pullback in the daily and we start to hold, this is the daily here. We start to hold back on the MAs somewhere around 85 or so, I think that could be a good little trade to the upside. We just have to wait and see because it's got a lot of, so what we've done is run straight back up into this 90 area where it did a lot of action before, and it was, buyers trying to push it up. It was getting capped by some sellers. Sellers were stepping in, capped it. We got the lower high coming to play and we expanded down. Didn't get too far, like I said, below 80 before it started to hold, and we've lifted straight back up again, back up to this 90 zone. So to me, like I said, it's looking, I'm biased to the upside on this, but it's mainly off that weekly. And I really want to see how that first pullback starts to hold because we could get weighty up here again and we could go straight down through 75. We don't know. Okay, but if we start to get this weekly, and it's because of all this action, you've got that run up there, expansion up, a decent pullback, another expansion up. It didn't run into some selling a bit earlier. And then sellers pressed it down. They may have been thinking we're going back down to 30, but instead it got held up around 60, high low, and we got that bit of a pop up, some grinding action coming in, off a dollar down to 80, a bit of a pop up, and you got this secondary leg down, which we've just started to break. So I really do like the fact that I'm expecting that to be a high low around the 75 mark. I just want to see that daily hold a higher level. Okay, so this leg up, I want to see some selling coming in. I want to see a few people get nervous, but I want to see those buyers step into the higher level and start to support that action. Now I've got a transition. I forgot to do that. There you go. Yeah, there you can probably see the right-hand side of the chart now. All right, so let's get on to the. Do you want to have a look at NST? Yeah, so the weekly's not looking too crash hot on Northern Star at the moment, but this level, it's a key level through 9. Just be wary, John. If this pulls back, especially on the week, and we have a bit of a test at 10.50, starts to hold that, it's sort of a bit of a pullback here to 10.50 zone. We hold it. There could be another decent leg up. But again, on the daily chart, I think it's a bit overextended on the daily chart. So there's no reason why Northern Star can't roll over. And my mouse keeps nicking off the mother screen. All right, VUL. Yeah, VUL, what's it, Vulcan Energy? It's done 3 million today. Yeah, everything qualified. It's had some decent volume coming the last few days. Let's just go back here. Just good run up. Yeah, of course you have that really big expansion up. It's just going to tempt too many people into selling. And if it doesn't follow through, then you can expect there's going to be some contraction for a while, or you're going to get a bit of a pullback. So now the question we're asking is whether or not on a daily basis, is this, is that enough of a correction off these highs? Let's just draw that up. I want to get rid of that actually. Maybe I just want to. So one problem with Spark, you can't adjust these because it's taken up most of the chart. Let's just look at the price action. So you can see the volume has picked up. Stochastic getting a bit overbought up here. Momentum starting to tick off to the upside, but what you want to see is that pullback. Yeah, some sellers come in. I want to see it hold a higher level and see if it can run up again, and then you can trade off that daily chart. I'll just go to a. That's it. Let's just use this chart. It's a bit better, isn't it? Just looking at that volume and the momentum. So what we're seeing is, yeah, these lows were taken. No, I wouldn't do that. Go a bit thinner than that. So these lows were taken out, and you've got move down, move up, move down. So I'm sort of looking at this as all one move before we started holding this level. Okay, and then what we've got, it's only really my level. So you've got this little push up here, tested an inside level around $7. We had another pullback. So is this your second leg up on the daily or not? Okay, before we broke out of 7. So really what you're trying to see is this going to curl back up again. And with this volume coming in, it's looking quite positive. And you've got the momentum also. Where'd you go? Momentum also starting to lift. Okay, it's just on the daily, it's a bit overboard up here. So what I'd like to see, if we can test, let's just clear all that up. I'll be really just looking to see if we can retest 7, come back into 7. You get some sellers pressure in. The stochastic may go from overbought to oversold, but it's holding this high level. It can start to hold up there, and you can see that buyers are soaking up. Once the buyers soak up and the sellers start taking the foot off the pedal, then you would expect it to go up through 8. Okay, and then you start opening it up from move up to 950 and then potentially right up to 14, I think. But all in all, what we're seeing at the moment is this big move up. Then you've got this kind of, if this is going to be a major cup and handle, then we should be seeing a move through 14. And we're just trying to trade that leg up to at least 14 or just see where it goes. I mean, that's what you're hoping for. And you're hoping to get in somewhere around here. as the market's on the rise, but you just really want to see what happens on this first pullback in the daily. If you can stick that 7, then you know where your risk is going to be. When it's starting to lift again, you can buy the breakout at around, was it $7, $8, buy 8, 50-cent stop loss, aiming for, for that move up to 14. I mean, if it starts to find some pressure up at 9,950, then at least you've got something, a bit of a buffer to play with. Okay, so it looks good. I think it looks good. You're coming out the right side of the action rather than try to buy when it hasn't really held any higher low. I think that's key. If you can buy when it's started to hold a high low, then at least you know where to. It's the market showing you your levels where you can manage your risk off. Okay. So Nick, yeah, I don't particularly like this. I just don't like the price action as such, because for me, if you're looking at your weekly, no, that's not what I wanted. Let's just make it a bit bigger. Is that right? Is that all of it? Yep. Is that this week? 19th. There you go. You can see if you're following this up, okay, and on your weekly, if you've got to take note of the anchors if you're buying it, okay. What you want to see is you've got higher low here, higher low here, higher, 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 higher low here. This is broken. It's just broken the higher low. So if you're going to buy it in here on the rise, you've got to be wary that that's not a breakdown. Okay, which actually I'd be more inclined to be looking to short that than anything else, and looking to sell that, because two things: you've got a lot of juice that's built up since, I don't know what that date is, but early 2020. You've got a lot of buyers built up. That trend up is extended. It's no longer the unknown. You're not buying the unknown. So when you're trading off this high low, you could have been buying that. You could have been buying that. It's still the unknown. Once you start to break out through the highs, and we're holding high lows all the way up, it's no longer the unknown. So that's an entry there. On the weekly, don't forget, an entry there. You're going long because that trend up is still holding. As soon as you break down this move down here, you've broken that uptrend. Okay, so I'm always looking for a market. If it breaks the uptrend, I don't really want to be going long anymore until it reconfirms, and I would rather see one, potentially two moves down. If it starts to get those two moves down, it's flushed out enough of those buyers, put them back on the sidelines, then you start to hold a higher low. That's great. Then you've had a leg up, you've had a corrective phase, and you're looking to buy back into that secondary leg up. At the moment, we haven't had a corrective phase. All we've done is broken the anchor. I've got to clean that up a bit. We've broken this anchor through here with this move down. We've come back up, and it's suckering in a few more buyers potentially, and it could be starting to sell off. So if you start to see on the daily chart this start to break down again back through 10, then I'd be looking to sell it as opposed to buy it. If you're long and you're long from up here, you got to know where your stop is. If you're long from somewhere in here, you might want to tighten your risk up, because you don't know where it's going to go to. Okay, so that's Nick WGX. Look, nothing's too flash. This was a lot of, to me, I look at this is a trend. This is a big sell-off. This is not really a trend up again. It's been choppy, okay, on the weekly basis anyway. If you're looking at sort of this move up off the lows, if you're driving down to the, what's that there? That's just focusing on that. So that's the move down. Go down to your daily. Yep, that's the sell-off there. You could have traded that on the daily with this sort of pressure up off the lows, contractive action. It breaks the upside. You've got your buy, your breakout, your risk below in this sort of zone in here. Okay, and then I don't really see too much after that. Potentially here, I think we might have got long in here. I can't quite remember now, but we have traded WGX. I just can't remember where. Might have been well before that. But either way, go back to our weekly chart. This action up through here, you've taken out this high, then we failed back into it. We've taken out this low. It's chop. To me, it's just chop, and it's more, you could get caught either way. So you've really got to trade off your daily. Daily's up at the moment. You're probably going to know, if we start to, and it's key to be looking at things like this. If you start to, considering what the weekly's doing, the weekly's a bit of garbage at the moment, I think. that's for me, you've got this level here. Okay, so if you're trading it off that and you know you've marked up that level here, we pull back, that deep correction's got to be, it's got to be cause for concern, because if you had market up, if you're expecting a big leg up, you know, the fact that we gap up through this high and then we fail straight off that high and you gap down and bang, you get smacked. Okay, then you come all the way back down, nearly back into this low zone, which you've traded once, twice before, probably a few times actually. Extend that out a bit. Okay, so you come all the way back in. A strong market shouldn't retrace that far. Then you've gone all the way back up, retested the highs, and we've had a deeper failure. So we've actually gone through the level. Okay, different now, because you know that's an active level. Okay, we've flushed out. So anyone who was getting long, and saw this move through there probably stopped themselves out, and then we've seen it pop back above. So that's that, you know, that move when you go extend through a level, like we're saying with the indices, anything like that, and then you start to pop back above, and then you hold back above it. You can potentially go long. It's going long for support zone, but you want to go long off the high low. Once it's confirmed, you can potentially buy that. You've got your risk below, okay, and we know that people have been flushed and caught. Anyone that saw that and we started to lift again, it could be more of a range sort of base scenario where you're going back up to the highs at 280. So fine to trade off the daily. I just think the weekly is a bit, it doesn't look quite as good. Okay, so that's WGX. Let's look at Z. Been looking at this one too, Gino, Joe. We'll see if, I'm going to have to probably see if we can get through RMS and we'll call it a day there. But now for me, Zip, it gives you some good runs. And I'm looking at this, if my mouse doesn't keep going, this zone in here to be something like this. I just want to see some work done there. Okay, so you can see the MACD was lifting back up here. I'll take a snapshot, actually. All right, so yeah, this level through here is probably even a little bit higher. And again, when it trades into a level, bounces, and then it's not going to get a bit of a run onto the upside. A lot of the times they'll go through a level just to trap some shorts, to squeeze some more people out, because they know that, you know, the more it bounces off that level and holds some lower highs like this, it's going to be a prime candidate to push through a support zone, because that was a clear support zone, and you had a level just below it, which had actually reacted off instead. So it's just to squeeze out some more buys, clean them out, put them back on the sidelines. Then we start to hold this in this lower level at, say, was it $5? Okay, and then this move down is no longer, it's been broken. So the trend down has been broken as we start to get a bit later. So you get, you know, you're assessing this action here as more sideways, but to hold that we don't know whether it's going to range sideways and then break to the downside or what. Your bias is probably going to be up. But as soon as you get this expansion up, and then you get a bit of a pullback, and the pullback sticks, that's your first leg up. You're looking for the secondary leg up. As simple as that. Okay, and you're looking for an area, because until that plays out, you don't know what's going to happen. Okay, as soon as you get that sort of leg up play out, and then it consolidates those gains, and it starts to break back up to the upside. I'm always working off that two legs, you know, whether it be two legs up or two legs down. Anyone that bought it there on that breakout, you know, that's fine. Okay, but there's going to be times when it breaks out and it comes straight back down again. It's a bit of a trap to the upside, and it comes straight back down. If you're buying that breakout not off a high low, it's just off a level, then I think it's a different game for me. Okay, it's a different game than what I play. I would rather look for that pressure up, that pullback start to stick. So anyone on the sidelines is looking to, there's waiting to get in, is looking to what happens on the first pullback. You know that the first pullback is getting supported around 7, and then you get that really good extension to the upside. Okay, so that's where I'd ideally like to play. Now, are we going to see something like that again? Okay, so I'll actually just draw that up. Are we going to see that we've got a zone through here? We've retested that. We started to lift. That's your leg down. If we start to chop around here, you've got your leg up off that level, and we start to do something like this. Whoops, I'll draw it a bit better than that. And we start to consolidate again, just like we did here. Then what will happen is you can see a level that you can buy into, okay, and you can manage your risk off, and you're looking for that secondary leg up, which could take us up to these highs, or at least, you know, if it takes us somewhere along those highs, even, you know, to 13, at least you've got a good risk reward scenario playing out, and you know that momentum's starting to hold. Okay, momentum's starting to push up. It's going from selling pressure to buying pressure. We just want to see if this can hold a higher low, and you're looking for that secondary move up. Okay, so I think, yeah, we just got to wait a bit on this. What was the next one? Zip, LCL, Ceros Limited. It's doing a lot for a small stock, isn't it? So it's churning through that volume. For me, there's obviously a clear resistance zone through 22. What was the news today? Extended and remains open. So decent news out today by the looks of it. Sold straight into. And the fact that it's up that resistance zone, it doesn't leave me too positive on this. So I would rather see pull back, something like this off the area and see what happens in a pullback and see if it can get supported at a higher level. And then happy to buy into it, because you don't really want to buy into the fact that it's come off that 1, 2, 3, 4 times, now maybe now 5 times. It's come off that 22 mark, say 20 to 23. It's come off that level. Do you really want to buy it there? Because you're guessing that it's going to break out. And if it's had good news, it's got sold into, it's not really the kind of thing you want to see. What you want to see is that gets sold into potentially. Okay, you get something like this, potentially comes back down to 16, 17, starts to get soaked up there, and you got evidence on the lower time frames. You might be a 30-minute, anything like that. Lower time frame charts just getting soaked up, and then you want to buy, because what's that doing is minimizing your risk. If you're buying here, looking at this chart, you're going to have your risk below 18. You're already extended into that zone. So you're actually asking a lot of the market, okay? You're asking the market, I know you're extended, but can you please go a bit more? Which is saying that we don't know who's on the sidelines willing to come in, but the more and more it gets extended, then less and less volume on the sidelines to prove you right. So you don't really want that probability, okay? You'd rather, probability like this, it pulls back, you hold a higher low, we've flushed out a lot of buyers, cleaned them out, we've closed that gap, we start holding a higher level, okay, then buy the break at 16, because you know that you've got the wind in your sails, the market's heading higher, and you're on the right side of the market, as opposed to buying into an extension into a confirmed offer zone, okay? You don't want to do that. It's not a high probability trade. So KPG, is that the one? That's a little bit better. I like that, actually. It's just very, very, it's a KPG, very, very thin market. And look at the gap, 235 to 240 to 278. So even though it's bid down there, if it gets smashed, it could just take off and go straight from 240 to 280 if someone hits a market order. So you don't want to hit a market order. You want to know what the depth is if you're going to hit that one. Obviously, it's got a massive, 40 cents, give or take. It's 38 cents spread after 40. You don't really want that. It's a 5 cent spread as it is when it's a $2 stock. It's very, very thin at the moment. But what you've got in your favor is that it's heading higher. Okay, you've pressured up from $1.60 up to $2.10. Then it's consolidating those gains. So there could be another good leg in this. It could go straight to $2, $3, $4. Okay, so it is, technically, it's looking okay. It's just that it's very thin. So I wouldn't be buying this up here personally, because for me, buying it at 230, just where it is now, my risk is going to be a low $1.90. And what's on the downside? And it's not that thick on the downside either. There's not like it's stacked up with bids. Okay, so very thin stock. Technically looks okay, and it's got some decent volume that come through. What's that? That's Friday. Decent volume come through. It's expanded today, but on very thin volume today. So just be wary that it's just not, it's not going to sit and do nothing for a while. Okay, we've got NVX. Is that the one? Looking good. Actually, don't mind this one. Who got that? It's done 3 million. That sort of matches my criteria. It's got some good volume. It's pretty heavy on the bid side, which doesn't mean anything, don't get me wrong, but it will entice people. Pretty thin and light on the offer. Mean that no one really, you're not getting, it's not trying to get capped at any sort of particular level, which means that it could be opening up for a good little move. And if you just go, straight out, mark that up. the key things I'm sort of looking for. We've got, I like that. I like your MACD it's had a good momentum's down, taken some heat out of the market. It's starting to, tick back up. Doesn't mean that it's going to rally, but it means that maybe this trend down has run out of steam. You can see it's come into a fairly, key level where it's traded through before. It's traded up to it, backed off, it opened below, straight down. So I'd say that's an actionable level to work off. And you can see the market thinks the same. It's pressured higher, come back down here. Okay, it tried to go again, come back into the level, got bought up just off the level again, and it's still holding these lower highs coming into level, but it's getting soaked up. Okay, so if you're looking to sell it, if you potentially are holding it here, you might hold off from selling. Okay, and if you're waiting to buy, you might start to dip your toe in the water, into off that level. For me, I'm not seeing a setup just yet. Ideally, I'd like to see a good run high. You don't really want to see, it gets, say it's doing chopping around here. You don't want to see sort of pop up just through the level and then this little minor pullback, because that could be, and then you buy that breakout on a minor level, because it can easily do, a bit of a press high, drag some people in, come down and just smack down all the way back down to 2 again. What you'd ideally like to see is a good push through and then something where it cleans out, maybe on 2 legs down again. It can clean out some of those buyers on the breakout and then start to hold this 250 zone. And if you can get something like that, then that's where you want to buy. You'll buy on the rise after it's proven itself on the upside, because that solid move up there means that there's not many sellers in the way, standing in the way to hold it down. Okay, but then it's going to come to the point where it runs out of puff on that initial leg up, and then we're looking for that second. This is all part of a second leg up. We'll just change colors. That's your initial leg up, that's your pullback, and that's your secondary leg up. Okay, but we're breaking down to a lower time frame. You're looking at this pink, a bit of a grind down, hold the level. We're looking for a higher low, and we're looking for that expansionary phase to buy into an expansionary phase. So we're not in a negative territory for very long, if at all. Okay, so that's NVX. I actually don't mind that at all. I just think whether that's, look, I think I've got that one on the radar anyway. I just want to see what happens here. Once it starts to break that downtrend, so you've got the downtrend, and that's just, it's not an exact science. You've got to remember, just because I put a line there doesn't mean I'm right. It means that that's where I'm expecting price is getting soaked up. And you can see once it starts to break that downtrending line, we might expect some sort of consolidation or some sort of range action at the least. If it starts to break to the upside, then we want to get in when it's getting some momentum to the upside. Ideally, we're just always trading momentum. Last one, RMS. Yeah, I don't like that too much, because I don't want to be trading these things when they go flush it out of low. There's no real high low, and it just goes bang straight up. You've got this sort of straight move down, you've got this V, and then sort of V-shaped recovery. For me, that's hard to trade off, because you're not really getting any confirmation from buyers. It's just everyone short, everyone long. I mean, you don't know if this is going to take you up, or we're going to have this kind of thing fail. Oops, where we go? Fail up here, and then we have a deeper correction like that to flush people out, and then we take off. It's just too choppy on that weekly chart for me. It is on the right side, obviously, with price starting to head high, momentum starting to lift. You've got a bit of volume come in. You can see just in here. We are on the right side of the action. If you're long, especially off here, just go to the daily, see what that says. If you bought that breakout there with your risk just below 145 or so, you're on the right side. It's to see if we can extend. So can we extend up to these highs and do something like this, where we just chug away all the way back up to the highs? Or are we going to have a decent retest, maybe a 150, confirm, drag in more buys, and have another run up? So for me, I'll just draw that up. I'm just going to see a couple of things, actually. Just really interested in what's happening here. Discard, take that. It's not what I wanted, but anyway. Sorry, my mouse goes too fast and it goes across the other side of the screen. There we go. So we're looking at basically, is this over? And potentially I wouldn't be buying it up here.
there's a possibility we just come off that level, and there's a bit of confluence up here as well, around that 180 mark, which leaves me to believe that we could, we're contracting in, we're rallying up, we could just come straight back down. I would rather see higher low, a key higher low off this level. I'm not talking these minor little higher lows. I'm talking good. That's one leg up. Should we draw it in a different color? That's sort of one leg up. I want to see decent pullback, and then I want to see a secondary leg up. So I wouldn't mind seeing a decent pullback, breaking that little uptrend there, just to squeeze out some buyers. And if it can hold a higher level, then you're looking to the lower time frames just to see if you can get a higher low. Okay, and you can work off when this is on the rise, as opposed to just buying into that support, or or buying here. Because if we buy here, for instance, and I'm right that that's just one leg up, what's to say we're not going to come all the way back down to $1.20? In the meantime, fear drives you back out of the market, squeezes you out. You say I'm completely wrong, and then you'd see it turn around and rally straight back up again, or we drop from here. That downtrend still in force. We go through $1.20 and we start to trade down to these levels at 90 cents before we consolidate and start to confirm and build a base to work up off. Because we didn't build a base here at all. We haven't built a really, really minor base just in here. So ideally, if we can get that higher low, then that's good enough for me on the longer term. And I'm looking at the shorter term to try to build an entry setup. Okay. So that's pretty much it. We've got through them all. Just gone over that hour. Hope you enjoyed that, guys. And I hope that was worthwhile. Any questions? If I've missed something, just send an email to support@tradesetup.com.au and I'll get back to you. Otherwise, if you're happy, you can wait to the next stream next Monday and rip into it then. So I hope you enjoyed all that. Any questions, like I said, email through, and it'd be great if you can leave us a like if you enjoyed what you heard, and help us spread the word a bit. All right, guys, enjoy your day, and we'll speak to you again soon. Cheers. Bye.